Markets are teetering, tariffs are trending, and investors everywhere are wondering, is this just noise or the start of something bigger? We've got inflation, AI nonsense, and CEOs still pretending they're relevant. As always, I'm joined with Bob, Nick, and Tyler, and this is Ryan, your host of Balance Your Wealth. We're going to go ahead and kick it off with buy, sell, hold. Here you go, Bob.
All right, so the big talk is about tariffs and what's going to happen with this. I will say that I am holding with Trump's tariffs. I think that while he truly believes and the administration truly believes that it's in the best interest long term for the country, that ultimately it's going to cycle back to lower tariffs in the long run. And we're just going to see this volatility with this administration until we kind of get through these years. So I'm holding at this point on it.
Yeah, for sure. I'll chime in. I think, it depends on your time horizon. You know, if you're younger, you got 20, 30 years to retirement. Now's a great time to buy. Generally, when the VIX hits 50 or above, the market's bottoming out a little bit. And I know I'm stealing Nick's thunder probably, but, if you can hit us with some more stats, Nick.
Yeah, right now it's a good time to buy as any. It's all just a world of probabilities, right? And anytime the market's off the top or there's a time of stress, it just increases your probability of success in the long run. So, now the odds are more tipped in your scale or more tipped in your advantage than not.
Well, and I think it's interesting what Tyler said about the time horizon because it certainly does factor into the time horizon. Because if you need something in the short run, and the short run can be just 1, 2, 3 years from an equity standpoint, we could be in for a lot more volatility. Whereas, Nick, to your point, I'm buying much more if I've got 20, 30 plus years because I know this is going to work itself out. We have been through plenty of administration changes, ups, downs in the markets over the past 100 plus years. And I look at this as just a short term blip in the radar, so to speak, of the long term success of the country.
For sure. Yeah. Clients ask all the time, what do you think is going to happen from here? And it's, well, market could go down further or we could see a bounce. But focusing on that long-term time horizon, I think that's the important piece.
But investing directly in Chinese stocks right now, so that's a no. No for me. No. Trump came out yesterday and said he wants our trading partners to choose between China or the US and is trying to have that baked into the trade deals. And, I don't think China's not it'll still exist as a country, but I'm not, if I had to choose between the CCP and the USA, I'm going USA.
I'll agree with you there, Nick.
I think we don't have a lot of history to tell us about tariffs, at least not recent modern history. But we can look back at Trump's first term when he slammed some tariffs off China. And China, they stayed hard line for a while, saying, yeah, we're going to fight till the end, similar to what they're saying now. And then within a month, there were some deals done. So hoping it goes the same way this time. But again, we don't have a crystal ball. We got a plan, and that's what we do.
Yep. Yeah, I think that's a really good point there, Tyler. I think it was late 2018. I think the market was up, 18, 20% at that point in time. And then Trump got in the trade war with China and basically wiped out all the returns for that quarter. But as soon as China came around and as soon as Trump came around and they came back to the table and were able to work together, it recovered from there. And it was kind of again, looking in the rear view mirror and everything, 2020 hindsight, so to speak. I think that we're going to see a very similar story when we look back at this 2, 3, 5 years from now.
Awesome. Great insight, guys. Good to know how you're thinking about this right now, buying, selling, holding. So something I want to dig a little deeper in now. Let's just pose this in the real world, right? You're 58 years old, sitting on $2 million in retirement assets. The market just dropped 15%. Tariffs are rattling the economy. What would you do for that client?
Oh boy, that's a great question. I think I start with how close are you to retirement? Even if you're 58, that doesn't mean that retirement is right around the corner. You could still be working for another 3, 5, 7, 10 years, depending on how much you like or don't like your job, right? So that's going to be the first step. It's certainly not going to be panicking and selling just because we're scared of where we're at. But understanding the time horizon, that's going to be my very first question or step when it comes to thinking about somebody that's at that point in their lives.
Yeah, great point, Bob. I think, focus needs to be on the plan, right? If they've been a client of ours for, the last 10 years, we've been working through a plan for them 4 times like these. So reverting back to the plan, sticking to the plan, staying calm, I think that's important in scenarios like this.
Yeah. I'll tell you what we're not going to do is recommend target date funds, right? Like those that are going to just naturally tick more and more conservative as they get older, because that's times like these are when those target date funds are usually at their worst, right? So it's when they're ticking more conservative when the market's in a time of stress versus having the flexibility to relax on that cadence and be a little bit more tactful with the transition as folks get closer to retirement. So not target date funds.
Not target
Yeah.
date funds. Well, and I think a lot of it depends too on the makeup of those $2 million in assets, right? So, Nick, to your point, if all 2 million is in their 401k and they're just sitting waiting to retire and they have a target date, 2028 fund or something like that, that's going to create a much bigger issue. And we may want to take action on something like that versus if it's kind of spread out and tax diversified with Roth and after tax and 401k and all the different moving parts. Is certainly going to be a different conversation.
All right, so I'm sitting here kind of more as a client, right? I don't have the professional expertise that you guys do as planners. So if I'm looking at these market conditions for this 58-year-old, one of the things I'm wondering is personally, would I, double down, get a little more aggressive and try to capitalize on the market dip here? What do you guys think about that?
Again, I think it goes back to the plan that we've built out for you or the specific client. Do we have buckets of money for certain things? Your short-term money, that's going to be the safer money. Do we have funds available for long-term? I would say yes, let's double down at this point. Again, there's plenty of charts out there you can take a look at, but anytime we have volatility like this, the 1, 3, 5-year returns are pretty darn good. So if you have that time horizon, generally a good time to double down, maybe add to those positions.
And maybe not necessarily doubling down, but at least rebalancing back to where you should be or where you were, right? So if your allocation is, 70-30, and because of this volatility, it's down to 60-40, let's just rebalance back to 70-30, back to where you're comfortable, back to what works with your plan. It doesn't have to be go from 70-30 to 100-0 because we've had some volatility. It can just mean recapitalizing a little bit so that you position yourself where you're comfortable, where your plan's comfortable, and not necessarily just, pushing your chips in on red, right? Let's be tactical about it.
And if you are already all in, if you are already all equity, how do you double down from there? And answer to that is, that's why we're diversified. Not every single investment or asset class has been wiggling in the same tandem throughout this year. In fact, international stocks are still positive on the year. So even rebalancing across just the equity portfolio, you're peeling some earnings off of the things that have been working and redeploying it into, at this point, U.S. tech stocks, which are on sale, especially compared to where they were, 3-6 months ago.
Yeah, one thing we didn't touch on is tax loss harvesting right now. Mm-hmm. And like Bob, you and Nick said, rebalancing that portfolio, maybe we're selling some of those losses, getting them invested, to take advantage of this bounce back up.
Yeah, I mean, that's a good point. There are things that we can take advantage of more than just from an investment standpoint. And that's where I think, Tyler, your points about the planning is so important, because so many times this conversation just cycles around what's the market doing and how do we capitalize on the market versus how can we, in our plan, take advantage of taxes or Roth conversions or increasing our 401k contributions or any number of things that we can behaviorally change that aren't necessarily tied to the ups and downs of the S&P 500.
Awesome. Great insight, guys. We're getting to the end of our time here for this episode of Balance Your Wealth. So I'm going to give each of you 30 seconds to kind of give us an idea of what you're watching for the next week. What are you trying to look at to see what's going to happen with the market or how you need to position clients as we're kind of moving through this turmoil?
Yeah, I think all eyes are on the tariffs and the trade deals. I think if we could see some of these deals getting done, I think the Trump administration has said they have some like 70 or 100 countries that are actively working on deals right now. I think if we can get some of those deals done in public, that could really bring some momentum back to the market. So that's what I'm keeping an eye on.
The Fed made it pretty clear yesterday that they're taking a more passive approach to this. So watching the Fed is like watching paint dry. So I think a more interesting thing to be watching is exactly what Tyler's talking about. I mean, I've heard speculation of like some big grand gesture of a 100-country trade deal being signed at Mar-a-Lago, and so if there's some big public thing like that, I think that would help stimulate things. So.
And I'm not even watching either of those things, right? I'm taking a step back and talking to different clients and diving into, okay, can we take advantage of this regardless of where the market goes in the short run, regardless what happens with Trump or tariffs or trade deals? How can we take advantage of this through whether it's Roth conversions or adjusting our allocations or doing the tax loss harvesting, right? So I'm more heads down. Let's get together and talk about your plan and how things can be taken advantage of given the situation. And then whatever happens in the market, that's going to happen. And at least we've done a good job of putting you in the best position, or putting our clients in the best position possible.
Awesome. I'm gonna give the point there to Bob, coming back to being client centric. That's what we always want to do. Keep the client first. All right, great takes and insights, guys. As always, I'm going to go ahead and hand it off to our episode winner of the week. Spoiler alert, Bob just messaged me and said that I have to give it to him because he's the CEO. So Bob, go ahead and do your 45 to 60-second rant.
All right. Well, I think that's very fair. And my rant today is actually on exoplanets with potential life that we just found. I just was reading some articles that I don't know if it's NASA or some researchers at some university found signs of what is called dimethyl sulfide, which is one thing that almost always is generated by organic life. And so it could be a super exciting development that we have found a potential ET on an exoplanet. This planet's like 120 light years away, so it's incredibly unlikely that we ever get there, at least not in our lifetimes. But I think it's super exciting to be getting some readings that we're, potentially finding other life out there in the universe. So, always fun to hear stuff like that. And that's my rant for the day.
Awesome. You're risking sounding a little too smart there, Bob. You better be careful. But thanks again for joining us for this episode of Balance Your Wealth, guys. We look forward to seeing you next week.